Welcome, everybody. Welcome to the Winning Momentum Podcast with your host. That's me, Scott St. Clair. Great to see you all. How long has it been? Have we been into 3 weeks off? 4 weeks off? Look, before I start on that, I want to wish everybody in the U.S., when I'm recording right now on July 4th, I want to wish everybody a happy July 4th. I hope you're spending a great long weekend with your family. And to all my Canadian friends, I hope you had a great Canada Day on the long weekend for July 1st. I was away with my family, completely off the grid. Completely off the grid, at a cabin about a 3-hour drive from where I live on a mountain. I go to a different mountain and stay in a cabin that has no cell phone reception, no internet, has no electricity service into it, so it runs off solar panels, so you have to be careful of your consumption of electricity. And for those that know me, you may say, well, that's not Scott. That's not how he operates. And it's true. It's true that in the normal course, if it was suggested to me that I should go somewhere and be completely off the grid and not do any work, that would in fact stress me out more than any other possible situation that I could think of. So for example, if someone wanted to go to the beach right now, if my wife wanted to go to the beach and just to hang out, that would just cause me immediate angst and stress. I wouldn't know, sort of straighten out the camera here. I think that's better, right? I wouldn't know what to do with myself in that situation. I'd be finding a way to work. And so normally that would be the case, but I knew it was a Canada Day long weekend, and so I agreed to this trip. I brought a bunch of work with me. I thought, well, I'm writing a book. I thought I could write on the book. I could catch up on a bunch of emails. Obviously, I couldn't send them without the internet connection, but I could at least have them ready to go. And the truth is I did nothing. Apparently, I needed the rest. We just chilled out, hiked, mountain biked, and just sat on the deck and played a lot of Sudoku, whatever that game is. And it was super relaxing. It was fun. My 9-year-old daughter got sick with a terrible cough and cold. She's doing better now. And so that was a bit of a bummer on the weekend. But the rest was terrific, and the scenery was amazing, and so that's where I was, and I wish you and your family a great holiday weekend. Now, where have I been? This Winning Momentum Podcast. By the way, episode 200, I'm going to give myself a clap. That includes the Martinis with Scott predecessor to this show as well, but episode 200 of content. Hopefully I'm a little better than I was 200 episodes ago, maybe not much. I'm not trying to suggest that I've made improvement, but the technology's better, and I think we're a lot more focused, and hopefully you've enjoyed. So for those of you that have stuck it out for the bulk of those episodes, for those that have joined recently and continue to listen and watch the content, thank you. I appreciate it. I really do hope that I add some value to your careers, to your business, to your life. And so that's why I do this, and it's been a lot of fun. So where have I been? Where have I been for 3 weeks that I've missed? I try not to miss any weeks. And the answer is I was out with COVID. Now, I need to tell you that I have not been sick enough to miss a day of work in longer than I can remember. When I was younger, in my 20s, 30s, even into my 40s, but mostly 20s, 30s, and I was working around the clock, and I was out late at night doing other things, and probably not eating very well, certainly not getting any vitamins inside of me. I would perennially, around Christmas, I would every year get bronchitis that would turn into pneumonia, like just every year, like clockwork. That's what would happen. I know many people that suffer through that. And so I'm used to going full out and then getting sick. And so maybe, I don't remember, 6, 7, 8, time flies, but that many years ago, I decided that I didn't want to do that anymore. And did I change my work lifestyle substantially? No, I did not. But what I did start doing was pounding vitamin D. And I'm not a doctor. I'm not recommending that you pound vitamin D, but I was reading a book on this, and I take a lot of vitamin D, and more than the doctors might recommend. And I monitor. I have private health care where you monitor every organ as often as possible, so I have no bad side effects from vitamin D. I've never been able to find anybody who has bad side effects to vitamin D. And honestly, I haven't been sick since. I'm not saying I've never caught something. I've never been fighting it, because that's true. You wake up with a sore throat or some congestion, but it's been gone by the next day, and I haven't missed any work. That's what I'm trying to tell you until I got COVID. So I don't know. That was what? I'm into my 4th week post-COVID, and before that, I was in Vegas speaking. It's up on the Winning Momentum podcast channel on YouTube and on the podcast. I was speaking in Vegas, so I was doing that travel. I went straight from there to Equip Innovations, one of our portfolio companies. And then when I got home, a couple of days later, I went down with COVID. Now, where did I catch this? I have no idea. When I was in Vegas, I didn't really hang out with anybody. I was by myself. Now, we had Globex was there with 3 representatives from that company, which is one of the companies that I run. And I took them to dinner one night, but none of them tested positive, and none of them were sick. So I don't know what that's all about. And apart from them, I was in my room by myself working on my speech and doing some work. And then I would go to the Vegas Convention Center and wander the floor and gave my speech, but I wasn't in close contact with anybody. I wasn't really doing anything that one might expect that I would get COVID from. And similarly, at Equip Innovations, I don't know, maybe I caught it there, but I don't know. There was a bunch of people that went positive on COVID sort of a week after that. So I don't think it was from there. I think that's a coincidence because this new strain's been going around. But bottom line is, I don't know. Maybe it was at the airport. Maybe it was on an airplane. Who knows where I got it? Now, everybody I've talked to wants to know what it's like, and which is why I'm raising this for you, not just to explain why I've been absent for a few weeks. By the way, if you're on the audio podcast, you won't know that I'm celebrating show number 200 by drinking a glass of scotch at the same time. If you're on the YouTube, cheers to you. Even though we released this show at 5:30 in the morning, I believe. So if you're watching it right then, you probably should not be drinking scotch, one would hope. So I'm double vaxxed. Not that you need to know my personal medical history. I do not have any of the boosters, but I am double vaxxed. I think we talked about that before on the Martinis with Scott channel, my thinking on that. If not, it doesn't matter. For me, the symptoms were super mild. Really, really mild. I consider myself lucky. So I woke up one morning, say a Sunday morning, and I had a scratchy throat. And because I haven't been sick in years, as I was telling you, I thought to myself, well, that's weird. Like, I just don't normally get a scratchy throat like this. I don't feel, it wasn't terrible. It's not like I had swollen glands, I couldn't breathe, I couldn't swallow. There was none of that stuff going on, but it was a scratchy throat. And it was weird enough that I went and grabbed a COVID tester, and there you go. I tested positive for COVID. Well, the next day, but apart from the scratchy throat, I thought I was fine. And the next day I would wake up and the symptoms would be entirely different. In other words, I didn't have scratchy throat anymore, but I had stomach cramps, right? And that continued on for probably 4 days. Like the next day, the stomach cramps would be gone, but I'd have a headache. And then that would be gone, but I'd be really congested. And so, but none of it was significant, dangerous. I never felt at risk at any point. And so those were the symptoms that I had, except for the tiredness. And I've talked to other people, friends of mine, colleagues who have who've had COVID in the last 2 years, and they confirm this exact feeling. The day after I tested, the next day, I was just really tired. I'm talking, I would just crash here on the couch or wherever I could, and I'd sleep for 2 hours, and then I'd be awake for an hour and a half, try to get some work done. But then I'd go crash for 2 hours, and then I'd be awake for an hour and a half. And that just continued on all of that second day. And the third day wasn't quite as bad, but was still really tired. And the day after that was a little bit better, but still tired. And it took about a week to kind of get myself out of that exhaustion, that complete exhaustion. And the worst part, apart from the tiredness, because I've always enjoyed my sleep, but the worst part was in the brain fog that accompanied that. And so I told you I'd be asleep for 2 hours. I'd wake up for an hour and a half. Well, then for an hour and a half, I would stare at the same email and I would just read it over and over, but nothing was computing in my brain. And so I accomplished nothing. I accomplished nothing is the bottom line. And that continued on a lot of the week. And it took really 5-6 days for the brain fog part to go away and for me to be not as tired, but still tired. And then there was a couple of tired / brain fog relapses in don't hold me to this, but days like 9, 10, somewhere around there for a day or two. And I think as I said, we're into week 4, and I think the tiredness has really continued even to this day. So I had a very relaxing weekend, as I said, a long weekend, but I think a lot of that is just refreshing myself from being sick for those several weeks. Now, I tested negative after day 10, I believe, day 9, day 10, somewhere in there. And so I think that's over. I know some people test positive again after that. I did not test myself after I tested negative, so I don't know if I had some sort of relapse that way. But there you go. That's the best way that I can describe the symptoms that I experienced. Now, I live with a wife and a daughter, and my daughter, sort of shortly after me, and maybe the day after or 2 days after, tested positive. And we're all assuming it's me that infected the family. But because I'm the one that travels and we live in a small town, but it is possible that it was picked up here and I got it from them. I doubt it, but that is possible. And so anyways, my daughter got it. And for her, she's 9. She has no vaccines at all. And for her, she had the sniffles for a day. And the next day she was fine. And literally that was it. And then my wife got it and she has no vaccines at all. She's younger than me. But she's not that young, but she's younger and she's healthy, and she chose not to have vaccines, and it hit her pretty hard from a sleepy point of view, like worse than me, and I think longer than me, and body aches. But again, nothing dangerous for her, and I think it's a mild strain. I'm not trying to minimize the disease by any stretch of the imagination. I just recognize that this is a milder strain, and every time I talk to somebody, the question that they ask me is, "What's it like? What's it like?" So there you go. That's what it was like for me, and that explains where I have been. I will also say that while I was away for 3 weeks, more or less, and not working, certainly not being in the space in my mind where I could write a show out, which takes me sort of an hour of quiet thinking about what I want to talk about, if in fact I'm not doing an interview, and getting that out to you. And, while I was not working, oh my goodness, so many things fell apart in the businesses. People are angry. People quit. None of this is terminal stuff, but it just tells me if you can't go away for 3 weeks, you have significant key man risk in your business, and that's a wake up call for me, which I've started on this morning. I need to be able to be sick for a week or 3 weeks and not have the world fall apart, such that I need to be the one that puts it back together. That is the nature of turnarounds, however, and everything I do is in the turnaround world, troubled company business. Like, you need to be there every day on it, punting the ball down the road, so to speak. And so I wasn't there doing that, and we've taken a bunch of steps back, but we'll recover on that quickly. What else is going on in the world since I've been gone? Well, I was checking out, as I'm shooting this, by the way, it's July 4th, so there is no U.S. business news. And if there's no U.S. business news, there's not a hell of a lot of Canadian business news. So, and all of my notes from 3 weeks ago, which would have been very entertaining for you, are out of date. So I scratched that. But I was looking at Bitcoin. At Bitcoin this morning, because a couple of people have been asking me lately about my investment advice to them personally. I've had a bunch of calls and questions about that recently. My investment advice to them personally in this uncertain world of inflation, rising interest rates, political uncertainty and unrest, not just in the U.S., but really all over the world, energy prices going up. It's costing me double now to fill up my pickup truck out here in the country, which is, I think, just showing up throughout the economy. And so it's a real problem. Anyway, so that had me looking at Bitcoin, which is not an investment. But before I even start this, listen, I am not an investment advisor. I am not an investment advisor, and I do not give you investment advice. If people want to call me, which they have been doing, and ask me questions, I'll answer to the best of my ability. I'm not selling you anything, which is key. I'm not selling you anything. Do whatever you want to do with your money. I'm not giving you advice. I'm not even an expert in that area. I'm an expert at the things that I do that are the pillars of the content that I provide for you. And some of that crosses over, people think, into markets and investment, which is not necessarily true. Anyways, all of that to say, I'm not here pitching you on anything, and I'm not an investment advisor, accredited or otherwise, okay? I was in, but Bitcoin came up. Easy for me to say. Bitcoin came up in conversation, and looking at it this morning, it's below $20,000 again. I think it was 19.5 when I looked at it this morning. And, it just reminds me, in last December, so December 2021, I was speaking at a merger and acquisition conference in Miami, which was exciting for me. You may recall, if you're a longtime listener of the show, because I was speaking, and that was for my first time out of Canada in close to 2 years, my first trip. So I was excited about that. And I have friends, like really good friends, best friends in Miami. And the vibe of that city just blew me away then, and continues to do. The growth of the city, the maturing of the city, the fun of the city without the schlockiness that used to exist there. And one of the things that blew me away was the influence of crypto wealth in Miami. It's just everywhere. Youngish people, certainly younger than me, wandering around, made millions on crypto. You can now buy condos, or you could back then, condos with cryptocurrency. You could go into clubs with crypto. There's private dining clubs that are crypto based that I found. I mean, it's really amazing what you could do in Miami, and the influence of Bitcoin wealth in particular, probably ETH as well, but Bitcoin wealth in particular on the city of Miami. And it was just a conversation everywhere. I have one of my best friends is a real estate salesperson there, and she's targeting crypto millionaires and billionaires. It's fascinating stuff. Well, that was December 2021, and here we are in June, July 2022. Bitcoin is down 70% from its highs, from its recent highs. That's wiped out $2 trillion in value. $2 trillion in value has been wiped out. Market value. Somebody thought they had that value, and now they don't. It's down 33% this year alone, 70% from its highs, but down 33% this year alone. Yet it is still not down with all that doom and gloom. With all that doom and gloom, you should remember that Bitcoin is still not down to its pre-pandemic levels. So in March 2020, Bitcoin was at about $5,000, $5,600, somewhere in there. I looked it up, and it's close to 20,000 today. So in 2 years, that's a four-banger, right? So you've had 400% increase. This is not terrible, but it is down from its high. And on top of that, if you've been listening to crypto news the last few months, you'll have seen that crypto exchanges, all of these peripheral businesses that have propped up to support the industry of crypto. So exchanges and also hedge funds, the exchanges are just falling apart. The service providers are falling apart. The hedge funds that are based on Bitcoin have put a ring fence around. And what does that mean? It means you go to redeem your money and they say, well, we can't give you your cash back. So we're just going to put a hold on everything for a while until things settle down. And so the entire space appears to be in serious, serious trouble. And so people have asked me what I think about this. And I have to tell you, I don't own any crypto. I don't consider myself an expert of this space. And as I've told you before, I'm not trying to give you investment advice, but I do have a few comments and I'd be interested. Give me your thoughts in the notes. Where is crypto going? The world of crypto, Bitcoin, ETH, where is this all heading? Is there value there? Is there a reason to own this? Is an investment? And I guess my couple of comments on this I'd like to throw out is I would just say that there is zero intrinsic value to Bitcoin or any cryptocurrency. There is zero intrinsic value. And that I may not be an expert in investments, and I shouldn't be giving you investment advice, and I don't give you investment advice, but I am an expert in valuation. I'm a trained expert in valuation. I've had a designation in business valuation and securities valuation. I've written fairness opinions and other valuation reports. I do understand value, and I should be giving advice on value, and people do pay me for me to give them my opinion or comments on value. And value, you have to understand by definition, is the amount of money after tax that you can put in your pocket from an investment discounted to today for risk and time, okay? So the amount of money that you put free in your pocket in the future, not in the past, in the future, what can you put in your pocket discounted to today for two things, one for risk and one for time. That is the definition of value. It has intrinsic value, okay? And intrinsic means internal. It might be the best way to describe that, as opposed to market value. You might have a share of a company, just make it up, company A, and its shares are worth intrinsically $100 per share, but market value might be $50 or market value might be $150, or it might be both because it bounces around between the two. Market value does not impact intrinsic value. Intrinsic value is the internally calculated value of that particular asset or that investment. And market value is just whatever people are willing to buy and sell at, okay? And so that's the difference between those two measures of value. And so if you understand that intrinsic value is the amount of money that you can put in your pocket into the future, discounted for risk to today and discounted today for time, right? Then let's apply that to Bitcoin. Let's apply that to a cryptocurrency. And a cryptocurrency generates no cash for you, ever. It does not generate cash. What it does is it has a market value that goes up and a market value that goes down. And if you own Bitcoin, 2 years ago or 3 years ago at $5,000. Well, it's close to $20,000 right now, and that market value went up 400%. If you're one that bought it more recently at a peak, well, you're down 70%, and you have no other value. Okay, so value is created by utility, but more so by cash going into your pocket from that investment into the future. Now, what is the utility? The utility ensures that there's actually a market there always, okay? So let's look at the US dollar, for example. Why will there always be a demand for US dollar? Well, one reason is you pay your taxes in the US in US dollars. Therefore, there's a demand for US dollars. Therefore, there's a utility for US dollars. And therefore, you will always have a market for US dollars because people need them to go and pay their taxes. Not true for Bitcoin. Economists might suggest that gold has a utility and therefore will always have a demand. And that is beyond the utility of calling it a currency, which is a bit bogus because you can't pay your taxes with gold, but you can use it in industrial applications, and you can use it for jewelry and other stores or shows of wealth, right? And so there is a utility for gold that does not exist in Bitcoin. Bitcoin is purely a trading market platform, okay? And it is not an investment in my view. It has zero intrinsic value. It has zero utility. That certainly can't be, you could buy that condo in Miami with cash, US dollars. You don't need to buy it with Bitcoin. So it has zero unique utility to it. And therefore, what is it? If it's not an investment, it's strictly a promote. And it's a legal, perhaps not, but let's assume it's a legal Ponzi scheme in the sense that new money pays out old money by definition. If there's nobody who wants to buy Bitcoin, the value of Bitcoin is zero. It's not 10% of where it is right now. It's not 20% of where it is right now. It's not at a low of 20,000 or 10,000. It's zero. If no one wants to buy it, it's zero. It pays no cash in the future, and it has no utility to create a demand, which is what you need for a market. If there's no bids, there's no value. If no one wants to buy it, there's no value, okay? So the only thing that drives the price of the crypto up is a bunch of bids, a bunch of demand, people wanting to get in, and they want to buy it because they like the promote. And the promote on cryptocurrency has been largely fear. The whole world's falling apart. There's going to be inflation. The value of the US dollar is terrible because they're printing trillions of dollars. That's the fear side of it. The dream side, the greed side of the pitch on that promote is the idea of a governments are tyrannical, and this is a way to create a utopia to sidestep intermediaries being governments with respect to people trading with each other and to currencies. Okay, so there's a bunch of pitches on Bitcoin, but at the end of the day, if no one wants to bid, there is no market. It is equally as likely that Bitcoin goes to zero as it is that it ever recovers to its high. I'm not predicting that for you. I'm just telling you that's a real possibility, and there's many economists who will tell you that it will go to zero because, like every other promote, eventually the jig is up and people want out, right? If you think about the highs of Bitcoin in 2021 in that area, what was the news around Bitcoin? It was all centered on the idea that institutions were going to start moving into cryptocurrency. Do you remember that? They're going to start taking a slice of all of that wealth that they manage, and they're going to put it into cryptocurrency. Do you remember Elon Musk started putting a bunch of Tesla's money into crypto for that reason. Now, I don't know what the hit is he took, or maybe he traded out before that. Seems to be a pretty smart guy. Probably he did. But what I'm trying to communicate to you on all crypto is that they're a Ponzi scheme. If there's no new money, it's going down. People have to get out. They got cash calls, they got margin calls, they have to pay some bills. You know, they used to be worth $100. Now they're worth $1 billion on paper, but now they want to realize on some of that, and the price is going to decline. Now, I'm not giving you investment advice. I'm not telling you it's going to zero. I'm just telling you mathematically that's a real possibility. Okay, it's also a possibility it goes to $1 million a coin. Who knows? Because and by the way, the smart people don't know either. Why? Because there's no value. There is zero value. It's strictly a promote. Can you get more buyers than sellers, or do you have more sellers than buyers? It's the only thing that matters. All right? And you want proof of this, by the way? You want proof of this? I think the most interesting thing of cryptocurrencies in the last several months, as the U.S. economy and perhaps the world economy has been falling apart, and the markets, the stock markets, have reflected that, is that Bitcoin, it has not been a hedge. It has not been a hedge to equities. It has not been a hedge to inflation. Unlike gold, which is typically a hedge to inflation and a hedge to stock markets, right? People get out of the stock market because it's dropping. What do they do with that cash? Maybe they buy some gold as a safe store of that wealth. Well, that's not what's happening with cryptocurrencies. Cryptocurrencies are highly correlated to equities. In other words, people just see it as another investment, as a high growth. I got four times my money in a couple of years. And oh no, the whole world's falling apart. I got to get out of this high risk Bitcoin. Okay. So remember that if you're thinking about this cryptocurrency from an investment perspective, it's just a gamble. There's zero value there. It's a gamble. It's a promote. People make lots of money on promotes. But don't deceive yourself into thinking that there's real value there, because there is not. All right, how about this? What else is going on? Inflation. Oh, my goodness. Inflation. Is anybody sick of this? Is anybody sick of the inflation discussion? The excuses coming out of the U.S. administration is beyond belief. Remember, at first it was transitionary. Oh, it's just going to be short term as we come out of the pandemic. That's going to be your inflation. It'll be transitionary. And it was like, okay, it's not transitionary. It seems to be sticking around. But you know, inflation is good for you. This is a good thing. It's actually just a high-class problem. It doesn't impact poor people. I mean, I just can't think of anything more outrageous than that. And then it was Trump's fault. And then it's Putin, right? The Putin price hikes. They still talk about that a lot, as if inflation hadn't happened already before the war started in the Ukraine. And now they've moved on to corporate greed. You've got the administration, President Biden, being interviewed or giving press conferences, telling gas companies who he refuses to meet, telling gas companies to lower their prices because this is all just corporate greed, telling food companies to lower their prices because this is all just corporate greed. I did a show on inflation, and I don't remember when that was. It wasn't that long ago. I'm sure you can surf back and find it. And I just want to remind you, you know, people think about, and you hear it on the news, people think about inflation as being a devaluing of the currency. We've issued so many US dollars that it's not worth what it used to be because we've issued too many dollars, and therefore the dollar's not worth what it was, and therefore it buys less than it used to buy, right? That's what we think of as being inflation. And that in a sense is true, but I just find it not a useful way to think about things. A much better way, I think, to think about things is the truth of the matter, which is that inflation or prices are really just a reflection. Increasing prices, inflation, are a reflection of an imbalance of supply and demand. When you have constant supply, but the demand goes up just like Bitcoin, okay? We've got a supply and demand theme today. If the demand goes up and the supply is constant, then the price goes up. If the supply is constant and the demand goes down, just like Bitcoin recently, the price goes down, okay? Supply and demand. If your demand is constant and your supply goes up, prices go down. If your demand is constant, your supply goes down, then prices go up. Did I say that backwards? If you have constant demand and your supply goes up, prices drop. And if your supply goes down, there's less of the product available for the same demand, then your pricing will go up, obviously, okay? So if you think about inflation that way, well, it leads to a non-economic way of thinking about things and therefore ways to fix things, okay? So what do we have? We have an imbalance of supply and demand, and we have both demand and supply problems. We have demand increasing because we have rebounded out of a 2-year, more or less, global pandemic, right? And therefore, obviously, demand has increased. And by the way, when you hear, oh, things are going crazy and there's so much demand and that's what's happening, don't buy all that, because the truth is demand, including trucking traffic and shipping traffic and all that stuff, it's kind of just getting back to pre-pandemic levels. It's not like we're doing 150% of what we used to be doing in February 2020. That's not true. That's not true at all. We're just getting back more or less to where we were. But still, from the depths of the lockdowns, we've had a bunch of demand growth, obviously, okay? But you would think we would be able to supply that demand growth because we already used to supply that demand growth before the problems of the pandemic. So we've had growth in demand, but only back to where we used to be, and we have supply constraints as well. So we have increasing demand and decreasing supply is the double whammy on inflation. Now, why do we have supply constraints? Well, labor would be one of them. A big problem in producing anything these days, including getting the commodities and the inputs that other people, require, like my companies, to produce goods. Well, that's been impacted by labor shortages, for sure. And we won't get into the details of why I think there are labor problems, but there's definitely labor problems, right? You hear the administration in the U.S. talk about how we're at full employment and there's very little unemployment, which is technically, statistically true, except what it does is it leaves out of the equation all of those people who don't want a job. And if you go back and look at unfilled positions, okay, so companies that are looking to hire people and can't, so they have unfilled positions, they're at an all-time high throughout all of history. There's just nobody who wants to go out and work. And it's not because they're all working, it's because they've exited the labor market, and we'll leave your political leadings to tell you why that might have happened. Okay, I think I've told you my view in the past on this show, which actually had very little to do with politics and a lot to do with human nature. But we have supply problems clearly because of labor shortages. Why are, the airlines are a good example, which is a hot current topic. Why do the airlines have no pilots? I mean, it costs a fortune. I think I was reading something this morning that if you want to start from scratch to become a pilot, it can cost you $500,000 to $1 million out of your pocket to go through all of that training to become a pilot. Testing, access, coaching, all of the things that you need to do to get your hours in. Extraordinarily expensive that most people can't afford, and it takes a lot of time. So what did these airlines do during the pandemic? Well, they packaged out all senior pilots, right, who are very, very expensive. They packaged them out. If you're a year from retirement, you get packaged out, and now you're gone. And now you're gone, except it takes years and a bunch of money to train new pilots, so they don't have any pilots anymore, right? So there's an example of I don't feel like I explained that very well, but there's an example of a labor shortage in a specific industry, which is causing supply problems. But in addition to that, you've had overseas lockdowns. Our supply chains are global these days. That means you want to go buy a widget, this microphone, let's say at an electronics store in your neighborhood. Well, there's all sorts of components in here from all over the world, right? There's the steel, there's the electronics, the chips, the stand that goes with it, the rubber that goes on the stand, the cords. I don't know where it's all made, but I'll guarantee you there's a bunch of different countries involved. And one of those countries, just one, is locked down, like China was for a long time. If one of those countries is locked down, well, you're going to be out of product. You're not going to be able to manufacture the complete unit for somebody to buy. So you've had that problem, but you've also had, and I think this is a huge one, you've also had the energy issue and the huge increase in energy costs. Okay, and what the administration is doing, which just makes me sick to my stomach, is blaming the war. They're blaming everything they possibly can. They're blaming Putin and Trump. They're blaming corporate greed on increased energy prices, which you see because when you're trying to drive to work or take your kids to school back in the spring, you're paying double. You're paying double or some hugely, maybe even triple, I think, in some states now, from what you were paying a year ago at the pump, right? So you're paying double, triple at the pump for what you were paying before. And you think, wow, that's inflation. But that's not the half of it, right? That same cost at the pump goes into the 18-wheelers, into the big trucks that are carrying all the goods all over the place all the time. It goes into locomotives. They have their own fuel. It goes into airplanes, have their own fuel. All of that has gone up tremendously. And where else are petroleum products, are fossil fuels used? Well, how about farming? Have you ever tried to run a tractor on a windmill or on solar panels? That doesn't work. You consume a lot of fossil fuels to grow your food. For farmers to grow your food requires a lot of fossil fuels. So why are food prices up so much? You need fossil fuels to farm. You need fossil fuels to transport that food. And then when you get to the grocery store, you've got labor problems throughout that chain on top of it, right? Petroleum products are inputs to tons of products that we use every day, to textiles and plastics. All of this is reliant on petroleum products, fertilizer, which is a huge problem in terms of availability in the food business these days in farming. Fertilizer, to a large part, is a byproduct or inputs to the fertilizer are a byproduct from the natural gas industry, right? And so all of this war on energy has caused, I think, a great deal of the problems on inflation, also in the supply chain. Now, why do I say a war on energy? Because if you hear the U.S. administration, they'll be, well, it's Putin price hikes. It's all about Ukraine. But it's quite clear, if you look at a chart, that the damage on energy started the day that the Biden administration took over, and to a lesser extent, the day that the Biden administration took over, and continued on right past the war in Ukraine and continues on to this day. And that inflation is part and parcel of that. If you just put the graphs beside each other, it's really astonishing. And so there was someone on the news the other day whose name I didn't catch, but part of the administration, who said the quiet part out loud, which Biden has said before, by the way. And he said, this is painful for everybody, but this is the new liberal order. The new liberal order is what they said. And Biden has said this before, that this is the transition. It's the transition to the green economy. All right. So all of that leading me to say that when people ask me what's going on in the world in terms of their investments, their assets, what should they be doing with their money? Is their business at risk? And mostly, when is this going to stop? It is not going to stop. There is no plan by current administrations to exit the problem that they have created, because they created it and they did it on purpose. This is the new liberal order. To a large degree, it's the Green New Deal that the Democrats had put forward. And I'm not trying to argue politically that that's a bad thing or a good thing. Maybe you're one that believes that we have to make that transition. I would have preferred some honesty. I would have preferred that they don't lie about inflation being transitionary or Trump related or good for you or Putin or corporate greed. That's all just bullshit, right? That's just complete bullshit. This is on purpose. And if you're in business, if you're investing, you need to understand that and you need to react accordingly. You want to fix inflation if there's a change in the administration. How do you do it? Just come back to this supply-demand imbalance. Raising interest rates kills demand. Why? Because availability of credit goes away and you can't afford the credit anyways. You're going to go remortgage your house to borrow a bunch of money to spend on frivolous consumption things. You're not, because all of a sudden interest rates are going to go up. That would be one way to reduce demand, but better in this situation to increase supply. And the way you increase supply is you lower taxes, which I'm never a big fan of, but that would be one argument, is that you could lower taxes. But mostly in this environment, you can deregulate. You can deregulate and you could focus specifically on energy, and it's going to fix a great deal of this. It's not going to happen. It's not going to happen on this administration. And until you see that happen, I don't see any cures, significant cures coming out of this administration for this economy. So what's going to happen? Interest rates are going to go up. Probably, I mean, I can't predict that, but they're going to raise interest rates. But just remember, interest rates at a historical level are really low right now. They're still really low. But if you're levered and you borrow a bunch of money, then you need to worry about where interest rates are going. And all of you people, this was a question I was answering the other day to the best of my ability. I don't know if I did any help in answering the question, but if you're into this modern, current day business plan of buying real estate that are rentals and flipping them, and you're doing this live on Instagram and other social media platforms, like that jig may be up. You need to figure out whether you can service that debt with that rent at 3-4 times the interest rate, because that's your risk. And it's happened before. Don't think it's crazy. It has absolutely happened before. All right. What else do I have for you here? Hey, let's talk about this fellow, JT Foxx. Do you know him? JT Foxx. So this is a guy, speaking of Instagram and speaking of flipping houses and real estate investments, this is a guy, when I was on my Clubhouse adventure back in 2020, and if you haven't heard of Clubhouse, was a new social media app, I think in early 2020, and it was really taking off, and audio only. So there's no video that went with it, and you could have conversations with really anybody, and you join rooms and you talk about a topic. It was pretty cool, and it was really hot for a few months there. I don't know what happened to it. But one of the guys I started listening to on there, or who had a great room, was JT Foxx, and he was holding really a Clubhouse version of Shark Tank. So he and some of his staff would be on there, and entrepreneurs would come in and pitch their business. And then basically he just berated them so much so that it was uncomfortable to even listen to. So I would get off of there, but he certainly had a name for himself. And I'm sure he had a name for himself before he was on Clubhouse. That's just where I happened to meet him. And so he's a bit of a social media guru. And when I say that, by the way, on Instagram, I don't know if that's his main platform. Maybe it's not, but he has about 101,000 followers compared to, say, a Grant Cardone, who's a similar business with 3.8 million followers. So maybe he's not really a social media guru, but he does a pretty good job on there, I have to say. And that's what, really caught my attention when I was looking at this guy. He's a real estate investor, primarily, near as I can tell. And he's, looking for deals all over the world. Part of his marketing materials say he's a private equity fund, but I don't know that he is a private equity fund. I think they're intending to be a private equity fund would be my guess, but I have no inside knowledge on that. Coaching, claims to be the number one business coach, perhaps in the world. I think I read that somewhere. And I don't know, I'm not suggesting any of that's true, but that's one of the claims. And, if you're not younger and you're not from the social media world, you might not know that coaching has just become, just think of it as consulting. You're consulting entrepreneurs, you're consulting business owners, you're giving them motivation, and you're doing that for some sort of consideration, whether that be a monetary fee or what have you. But people are always building coaching businesses, and this JT Foxx certainly has come from that world. And when you're in that world and you're very successful at it, you start holding mega events, think Tony Robbins, things like that. So you have mega events, and to those, he always has celebrities attend these events, and therefore gets a lot of attention. And clearly he pays these celebrities to show up. I don't think there's any secret about that. And so this is sort of this background, as I see it, on this JT Foxx. Now, I'm not a big fan of his pitch. To me, I'm a little more conservative. I'm an accountant by profession, so I'm a little more down to earth. And he's always just running around with celebrities talking about millionaires and billionaires. Come meet these millionaires and billionaires. And it's way too schlocky for my taste. But when he's not in show mode, was what I've learned about him, he's actually pretty good. If he's just talking normally and not trying to put on an entertaining show, he seems to be pretty smart, and he seems to be a pretty good businessman and a pretty good investor. And so all of that to say, I was listening to something of his a few months ago, and he started a club called The Founders, which is basically a deal club, a merger and acquisition club. And the idea there is that you join on Zoom virtually, and people pitch deals, and he asks a bunch of questions, or other people ask a bunch of questions, and then there's a portal that you can get into, and you can say, hey, I'd like to throw 25,000 or 2 million or whatever into that transaction. And it's syndicated. It's broken up, and it's an opportunity for people to participate and co-invest, is what the pitch is, with JT Foxx. And so that seemed interesting to me. And then when you get into these deals and you start looking at them, they do what's called a deep dive. And by the way, I'm not giving you any inside information. You can go join the Founder Club for free. And in fact, at the end of this, I might suggest that you do that. You can go join this for free, and you'll hear firsthand everything that I'm telling you. So I don't feel like I'm talking out of school on this. I'm just giving you my experience and my impressions. And so you do this deep dive where you get a one-on-one with the person who runs the company or their management team that's trying to attract some money, and you get to ask due diligence related questions. And so you can join this founders group for free, but then if you want to go to the next level, actually get into the portal, pitch your own stuff, meet people on the side and increase your network and this and that, you need to pay a one-time fee, or what I think is a one-time fee of $5,000. Okay. Which I did, because I figured, I'm curious about this guy and his marketing abilities and what he's trying to build here, because it looks interesting. And so a while ago, I paid this $5,000 and I attended a few meetings. I get interested in a transaction. I won't say which one, but it was a lending deal. And I wanted to see what the structure is because, I grew up for 30 years. I've been on the investment banking side and working on deals. They tell me about $27 billion of mid-market and smaller transactions, which is a lot of transactions. And so I understand how deals and transactions should flow, and I'm trying to understand what these people are doing. And it was never computing for me. Nothing ever made sense. Like I got interested in this deal. I go through this deep dive session for an hour and a half with the company that I was interested in, but there's no term sheet. Nobody's clear on the deal. Nobody's clear on how much money they need, what they're going to pay, what the structure of the investment should be, what even the assets are, right? Like you've got 4 or 7 different companies in this business. Are you just borrowing it on the one company? If so, are there restrictions and transfers to the other company? How is this all working? And the answer, it turned out, is it's not working at all. No one's doing a term sheet. No one's structuring the deal for these people. By the time you get to go and do something, it's changed. The answer, by the way, is none of the companies were involved. It turns out the principal, they said, was just going to borrow money on his home from this group of people and put it into the business, him or herself. And so I just found that weird. That's not the way deals should happen. You should have a term sheet. What is a term sheet? A term sheet is really a business person, non-legal, layman's writing out of what are we trying to do? Who's selling what? Who's buying what? Why? What is the price? What is the consideration? Meaning, is the price paid in cash or is it paid in something else? What are the terms of all that? Stock, debt, what's this? If it's debt, what's the interest rate? What's the security? All these sorts of things. And then you can negotiate off all of that. You don't just kind of make it up as you go along and not communicate. And then I was wondering to myself, it can't just be the $5,000, right? It can't just be the $5,000 that this JT Foxx organization is after. So what else is there? And I kept waiting for the other shoe to drop, and then the other shoe dropped, which is that effectively they're taking 10% of the net profits of every transaction for being the house, which I have to say, I don't really have a problem with. Like there had to be a fee. There just had to be, right? Like why would you go through all this work and there not be a fee? Even if you have, say, 300 people on the call and they all, which probably is what there was, and they all paid $5,000 one time. Well, that's $1.5 million, I think, off the top of my head. Fees, one time, which is not going to change this fellow's life. And so what's the point of all the hassle? Because there's a lot of hours going into that. So the 10% off the top of profits might be the answer to that. But then you learn, well, maybe he's not participating in these transactions, but he's still taking 10%. And then you learn no one's investment banking and organizing these transactions. So who the hell knows what's going on? It just seemed to be a bit of a shit show. And so I lost interest quickly. Now, on the other hand, I told you the guy's a master showman. I don't think there's any doubt about that. So when you go on these calls, which I thought was going to be about deals and I would increase my network with interesting people. There's some terrific people on those calls, by the way. I was really impressed with the quality of people. And so, for example, he had this guy on, Jesse Cole. And if you're on the audio, I'm holding up a book right now written by this author, Jesse Cole. And the book is called Fans First. And he is the owner of the Savannah Bananas, which is a baseball team. And what JT was able to do was to get this guy on here and pitch his business philosophy and how he turned around this business of the baseball team that he had purchased and was releasing a book. And JT, I think, was able to get a bunch of people like me to buy the book for him to bump him up the list. I didn't go back to see how he did on the New York Times or the Amazon list, but there was a lot of people that were buying that book that otherwise would not have known about it. And so I thought that was pretty cool. I don't know what JT's cut was for doing that, but there's the power of that network. I was on another call on a Zoom and Vanilla Ice was on the call, which I thought was really cool. If you don't know, he's a rapper from, I don't know, the 90s or something. But wow, was he impressive. I was really impressed. His he was just telling everybody what he does now for a living and the music royalties that he's purchased and the real estate. I don't think any of this is a secret. Again, I'm trying to protect as many confidences, well, all the confidences. So I don't think there was anything secret about that, but it was interesting. It was a fun half hour, 45 minutes, educational, and, met by Zoom, but then I'm one of like 500 people meeting this guy by Zoom. So it's not like it's me, but it was cool. Sit here and listen to what he's up to. And so that's what the experience is like in this situation with JT Foxx in this Founders Club. So what all of that to say what? Well, I don't know. I just thought I wanted to tell you that story, but I would say this. If you're interested in deals and you want to learn from some pretty smart people, some pretty sophisticated people on a global basis, because he has all sorts of international flavor in there, it's free. You can just join this founders group. And then if you want to, I think all you have to do is register for the event. And then if you want to go farther, if you want to pay the fee and you have to be accepted because you have to talk to somebody and go through an interview and you want to become a member, well, that's a different story. But if you're new to this, if you're interested in the space, it's a pretty good group of people beyond the show. It's a pretty good group of people. Now, if you're more sophisticated and you actually do deals for a living, this is just frustrating, and I'm out on it. I was texting one of my co-founders the other day, not a co-founder of my business, but another member of that group, and said that I'm out on it. It's just too showman-like for me and not enough substance. But if you're junior in the space, check him out, JT Foxx. I just follow him on Instagram. You can do that too, I'm sure. What else do I have for you? Oh, look at that. I've been an hour and 2 minutes on my first show back. I was a guest on a podcast last week. I think that'll be released maybe in about 4 weeks from now. I have another one I'm shooting this week with a special guest, and we'll get back into the rhythm of interviews now that I'm back. I know that we've had a bunch of questions in from listeners, and you know that I like to answer audience questions as best that I can. I lost them all. So whatever you sent me in the last month, let's say, are just gone. I'm going to blame the brain fog. But I do know that some employees who haven't seen me in a while, like at Devani Stainless, even at KIP Innovations, perhaps at Globex, people are looking for updates from me on the companies and what's going on in the Sinclair Range corporate world. I will, the next time I'm doing a solo show, which might be 2 weeks from now, I will give everybody an update on that, just a heads up so I'll be addressing employees as part of the show, which I do from time to time. What else can we talk about? I think that's it. I'm over an hour into this thing, episode 200. Can you believe that? I'm very excited. I can't believe this experiment has gone on this long. I want to thank you very much for listening. And remember, please check out the website, thescottsinclair.com, thescottsinclair.com. All the content is being posted there, and you can subscribe and see everything that I produce. Thanks again for listening. I'll talk to you later.